Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, September 15th. Hey, we got a bunch of economic news releases to go over today, so I just want to jump right into it. But I also want to give thanks to some rain we got here finally in SoCal here. As everybody probably knows, we're going through a severe drought, and thankfully we got some rain today, a good amount of it today. So anyways, also please keep your thoughts and prayers on some people in the Northern California. They're going through some very hard times with these fires are going up there. I have some family I had to evacuate. Thankfully they're alive, but we don't know about their homes, if their home has survived. But lots of homes being wiped out, businesses being wiped out, farm stock being wiped out up there. So please keep those people in mind, good people up there. We wish them nothing but the best, and hope that things get back to normal for them very soon, and things go well for them. So please keep them in mind. Let's jump right into the news here. Sorry for that little preface, but just felt like I needed to say that. Economic calendar. We got a lot today, so we'll jump right into it. The retail sales for the month of August. As you can see, July was a pretty big month here, but August was up slightly at 0.2%, and which came into expectations. Now, if you take out the big ticket items like autos, we had a 0.6% growth in July. Again, another big month. Forecast for August was 0 and only 1.1%. So a little better than expectations, but August obviously was much disappointing. So it looks like most people did their back-to-school shopping and stuff like that before August. Usually August is the big month for that. Empire State Index, this is the manufacturing in the New York region, and still very disappointing. Basically, this is a contraction instead of expansion. So we had a negative 14.9 in August, and September at 14.7. So obviously not very good numbers right there. Industrial production, 0.9% back in July, and came in expectations at negative 0.4%. So another pullback. Capacity utilizations even not quite there. We're actually a little bit lower, from 78% down to 77.6%. Business inventories dropped from June to July. This is something we want to keep an eye on, because usually businesses stock up on inventories when they're hiring more people. And in July, if they're not stocking up, are they going to be continuing hiring, and the job numbers, will they remain? Okay. Stock market's up. They're kind of rebounding after yesterday, the big sell-off. So there are a lot of people investors trying to buy bargains that might be out there after the big drops that they experienced, especially in the energy sectors. Bond market's pulled back today. We're down about 16 basis points, resting. Looks like we're still down below the 25-day moving average. As we see, we touched it. Even yesterday we touched it. We pulled back. Hopefully we can get above that again. When you keep hitting it and it gets stronger and stronger, that strong floor it was a strong floor. Now we're below it, and we've touched it a few times, and showing that it could be a strong ceiling for us. So it may be difficult for us to pop up there. So hopefully we'll get up there this week. We got the Fed meeting later this week on Thursday. Starting their 2-day meeting starts tomorrow with the announcement on Thursday. Projections on that is still split on if they're raising rates or not raising rates. The Fed fund futures basically are saying went from 41% down to 25% that they'll raise rates. So the chance of them raising rates are actually dropped, but it's still split. The Fed does want to show confidence in the markets, but there's a lot of concern about inflation, the global aspects of war, China and Europe and everywhere else, the stronger dollar. What that could hold, stuff like that. So it's kind of a toss-up right now. All right, folks. So looking at the bond market, rates have worsened today as a result. Since we're down 16 basis points from where we left off yesterday, that would translate, to obviously a worsen interest rates today. All right. Stay tuned. This could change as stock market changes. Money may be pulled back into the bond market. This could change for the better, but hard to say. Right now, it's not looking as well as we would like to see it. All right, you guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Take care.